test. Oh, there we are. Countdown beat me. Hello, everyone. It's July 1st here, Canada Day. I'm in Canada. So I just thought I'd do a quick episode. It's been a few days since I've uploaded to this channel. I've been busy doing other things. As you can see, I got a light in the background. It looks a lot better, I think. Still working on the studio a bit. I got to do a few things, but it's coming along nicely. Anyway, I thought I'd come on and share with you my Wealthsimple cover call ETF progress and updates. Let's see here. We'll get right into it. And here we are. All right. So this is the overall dashboard. To date, my current value is $108,873 with the amount invested is $113,123.79. So this portfolio is down $4,250 more or less, or 3.8%. But the passive income projection is about $10,928. So that's a 13% yield overall. So, you know, if all things stay the same and I just collect these distributions, I'll be money ahead. The distributions will take over what this negative gains is, capital gains is. So not feeling too bad about that. Let's take a look here. We'll go through the funds, so each fund's doing. Now I got my two Vanguard ETFs here. These are strictly for growth, or there are some dividends associated with these funds, but these are strictly my growth stuff, my growth funds. Now these 1, 2, 3, 4, 5. These 5 here are all cover call ETFs. 2 through Harvest and 3 through Evolve. Now the MicroStrategies MSTE ETF here, I'm down quite a bit. 5,789 for 41.4% decrease. The story with this is it's a Bitcoin. It follows Bitcoin, so Bitcoin's tanking right now, and specifically it follows the strategy ETF, which holds Bitcoin. So when Bitcoin tanks, this goes down as well. So I'm hoping that Bitcoin kind of levels off here and we just stay status quo with MSTE. They did cut their distributions from 15 cents down to 10 cents. So there's a bit of a distribution income cut there. So I'm hoping we can just ride this out. And then if the Bitcoin cycle is true, the 4-year cycle is true, we should see an uptrend here probably September, October, sometime in the fall, where it's going to start coming back up. So Bitcoin starts coming back up, then hopefully this number comes back up and distributions start going up as well. So in the meantime, I'm not going to really focus a lot of extra cash into MST. I'll put a little bit. I was actually thinking about throwing my RSP portion of MST into a drip, so it just feeds itself, and then focus the rest of these ETFs and buy some how would I say, like stronger base type ETFs that's not as volatile, that has stability yet some income at the same time. And looking at all this red here, you'd think I'd be kind of disappointed with, you know, the amount that it's down or whatever, but I'm actually kind of not. And I'll show you in a bit with the dividends or distributions how it'll kind of work out. I should be ahead, like a year from now, I should be ahead of where I am presently with distributions. The next one, HHIS. This is a good one to have. You got they're fairly stable. It's down a little bit now, 4.45%, but it's been fairly stable and fairly consistent. through its lifespan or timeline. Let's see, Evolve. The Evolve ones, these are the ultra yield ETFs, Easy, Canny, and Biggie. And I'm pretty excited about these ones too. Like they're all down a little bit, like 3.3%, 0.86%, and 6.3%. But their yields are really good. We'll go through here, this next page. Now this is all my holdings and how they broke down. See, like, well, Biggie here, Evolve Biggie, 117 shares. This is how much I've got invested in. This is my average cost. This is the current value and the current price per unit. And this will be my dividends, right? So if I was to take, if all things stay the same, say hypothetically it didn't change, you take your dividends, add it to the current value, and then it should be higher than this. So if you add that to that, and it's over that, you're doing good, even though we're down a little bit right now. But I anticipate, the value of this to go up and down. Hopefully it goes up. Like hopefully this comes back up to 17.52 or greater. That'd be bonus, but I'm more focused on this and this for these cover call ETFs because it's strictly for income. Same with Canny. Like here's another example. 155 shares. That's how much invested at that price. See, it's not even down that much, but projected to make that much. All these dividend numbers are going to go up because they're going to be adding to everything throughout the year, right? So these are not going to be staying the same. Maybe the Vanguard, VDY, and VUN. That'll be, I'm probably not going to be adding too much to that. Just going to let those grow. I might not add another Vanguard ETF called VFV. It's another growth type ETF. Pretty stable, and just VFV just follows the S&P 500. Yeah, so that should be good. But I want to kind of focus on these cover call ETFs and get these dialed in and get them generating some good income. Now, portfolio. Actually, let's go here. Dividends. This is how the dividends break down. This is what I'm projected. This here, 10,928 is what I'm projected to make in dividends this year or annually. And that breaks down to $910 a month. But that's going to change as well because, like I mentioned before, I'm going to be adding cash to these cover call ETFs, and the value is going to go up and up and up because that's the point of these cover call ETFs. It's just income. This is the breakdown here. See, this is pretty high. 52% of this portfolio's income is from MSTE, which it's pretty good income, but it's just nervous because there's a lot of volatility in this one. So what the plan is to get some more cover call ETFs that are stable, that still provide the income, but their NAV doesn't decrease up and down, something that's a little more stable. And here's this little chart here. I really like this little chart. Gives you a breakdown of each month what it's going to look like if you hadn't changed anything. So it kind of looks like you can average about $900 a month. That will go up, guaranteed. Now this is kind of similar to that last chart. This just breaks down the dividends a bit more. Current value is how much dividends, and this is your yield. This will give you your next payment, how much is coming in. And these Evolve ETFs here, Biggie, Easy, and Canny, they get paid out every 2 weeks. So you're getting 2 paychecks a month out of these guys, which I really like. And I'll show you another visual tool here that I really like as well. We'll get to the dividend calendar. Right here. This shows you every day that you get paid. That's for July. This will be for August. It wouldn't be great if every day on these calendars was filled with these green dollars. That'd be one heck of a goal. Now there's something else here. Was it dividends? I want the common. I think this is just that. Okay. Holdings. Oh, yeah. Okay. As far as transactions for the week, I just put $600. I bought some more Biggie. 1626 is what I paid per unit. And what does it say here? How many I got? How many I picked up? Oh, just about 37 shares. So that bumped up the income a little bit, which is all right, because that's the goal, right? Now, as far as future purchases, what I want to do, let's see if I can get back to dividends. Is that what I want to do? Diversification. Oh, I had this all planned out too ahead of time. Let's do this. Okay, as far as with Biggie, I currently have 117 shares. And what I want to do is I want to get up to a specific number of shares, not a specific value. So I want to get 160 shares of Biggie in my TFSA. And then just kind of hold there for a little while. And then I'll work on getting these other ETFs up to a certain number of shares. Because a certain number of shares with the distribution give you a specific certain amount of money every pay. So it'd be nice to have, like, say for example, 1,000 HHIS, because they pay 27% per share. So that'd be $270 a month. Rather than focusing on, investing a specific amount, say $10,000 into the ETF. That's kind of more of a growth type mindset to me. So I kind of want to step away from that because this is income investing. So I'm going to be more worried about how many shares I have and how much income it's going to produce. If I get to, the red days, that just means stocks are on sale or those ETFs are on sale. And barring, factors like MSTE is 41% down. Is that a good buying opportunity? Sure, they're cheap, but kind of uncertain as to what's going to happen if they're going to cut their distributions more, or maybe even a reverse split, which would impact, your income. So if it doesn't affect the income, if you don't see any negative news coming as far as the income goes, you could probably go ahead and start, dollar cost averaging and getting the sales to get your share numbers up. That's the way I see it. So each ETF, I want a specific amount of shares in there producing a specific amount of money. That's consistent. No. And as far as these two, I just want them to grow. I think if I'm going to add value to these Vanguard ETFs, BUN and VDY, it'll be, I'll just put money in out of my pocket and grow them that way. I'll just buy that way, like for my paycheck. Because I still want these things. I still want to add shares to both of these positions. Now, no, let's see. I think that should be it for now. I think I covered what I wanted to cover here. Yeah, so that's the update. We'll see what comes along next week. I have to find a way to, because this is both RSP and a TFSA, I have to figure out how to divide, like, because I got MSTE in both my RSP and TFSA. And then biggie here is just TFSA. All the rest is in my RSPs. So I got to figure out a way to, like, on here, create a different bar here, I guess you could say, a different category for just my RSP and just my TFSA. Kind of like with funds and crypto and cash here, right? Lots of learning. Anyway, I'm still pretty excited about this whole cover call ETF wealth building, income building strategy. Snowball analytics, I so far love it. Like, oh yeah, here's my future payments. There's so much to explore, so much to do. You can utilize this in so many different ways, depending on how you want to, view your investments. And you can add other portfolios. Like, I also got my CIBC RSP. But right now, for this channel, I'm just focused on the Wealthsimple stuff. So yeah. So I think that'll do that for this portion. If you made it with me this far, thank you. Please like, comment, and subscribe.